What's going on, guys, and welcome back to another very exciting video. We are going to be talking about a stock that I do not talk about a whole lot on the channel, and that is Tesla stock. Tesla is one of those stocks that has a very interesting valuation and seems to be caught in a very messy situation right now. And even Goldman Sachs is actually seeing something similar going on with Tesla stock, with the valuation and how it's being calculated. So in this video, we're going to take a look at that information, take a look at how Goldman Sachs is potentially looking at Tesla stock, and then basically dive into its valuation and where it could be headed in the future, in my opinion, in Goldman Sachs' opinion. So let's go ahead and jump into this video. If you do like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Tesla's chart. So we can see that Tesla is currently trading at $156.80. And they are up actually 10 cents after hours, so $156.90 after hours. And the stock was down 2.58% here today. Over the last 5 days, down almost 10%. Last month, down almost 20%. Last 6 months, down almost 33%. And then over the last year, they are down over 50%. So a stock that has been absolutely beaten down. If we actually zoom all the way out to their 5-year chart, we could see that back in 2020, we are actually seeing numbers that are lower than where we're at today. So it's been 2 years since we have seen numbers this low for Tesla, and it's getting very interesting to see where this valuation is going. And things get even more interesting with Tesla stock when you look at it compared to the S&P 500. So again, here today, Tesla was down over 2.5%. When we jump over and actually look at SPY, the S&P 500, we can see that it was actually trading above its open for most of the day. And then basically Jerome Powell came out and talked about how he believes that they may need to increase interest rates over the next year or so still to kind of continue to get inflation under wraps. So overall, though, we can see that there's a clear discrepancy between how Tesla stock is traded over the last 5 days, over the last month, compared to the S&P 500 that is basically traded even over the last month, and Tesla stock being down, around 20%. So it is clearly has something going on with it that is, causing the stock to go down. That's not what we're going to get into this video. Honestly, there's a lot of different, theories about what's going on with Tesla stock, whether it's production issues that could continue into next year or Elon Musk and everything going on with Twitter. Again, that's not what this video is about, but let's go ahead and jump into what Goldman Sachs is actually saying about Tesla stock. And what Goldman Sachs actually did today is they cut their price target on Tesla stock. So originally they had it at $305, and they have now cut it down to $235. So that, especially coming out of a company like Goldman Sachs, is going to affect a stock in a major way. And just to reiterate, a price target is basically a company's prediction for where, or an analyst prediction for where a company is going to go over the next year. So, as of a couple days ago, they thought that Tesla was going to go to $305 over the next year, but now they're saying it's more likely to go to $235. So that is obviously a huge move. We're seeing a $70 difference between those two price targets. What's even more interesting is actually one of the comments here. So basically, Goldman Sachs is now switching to a PE-based price target and has introduced a new model for its 2025 EPS estimate. So this is very interesting. I, on my channel, have used a lot a PE price-based target. I've actually done a video in the past where I've looked at Tesla and talked about its PE ratio, where it could be going. I've also looked at stocks like Amazon, which again trades at a very high valuation, kind of similar to how Tesla has traded over the last year or so. And basically use the PE ratio as a good metric to look at it. PE ratio is price to earnings ratio. So basically you're comparing it's giving you an estimate of how many dollars you're having to pay for $1 of earnings. And that's the best way to look at it and best way to kind of understand PE ratio. And clearly, Goldman Sachs is now saying that Tesla needs to be looked at in a very similar way. So they have updated their pricing. And this often happens when you look at stocks that have gone from a very growth-based investor base to now a more value-based investor base. So when a stock starts becoming lower and lower valued and its PE ratio begins dropping, into the 20 to 25 range, that's when a lot of value investors become more interested in a stock. And oftentimes what you'll see is growth metrics will start to fall off. And when you start seeing growth metrics going down, basically a lot of growth investors will start getting out of a stock, and that will drive a stock price down. And then once it hits that level of around 20 to 25, you will start getting a lot of value investors actually jumping into a stock. So that's kind of what we're going to be looking at here in the next couple slides of where Tesla could be going over the next, period of month, next 6 months, next year, and where that price could be that it'll finally kind of settle out at and turn around. On Yahoo Finance, you can find these PE ratios. So specifically, we're always looking at the forward PE ratio. Trailing PE ratio, I don't pay a whole lot of attention to. But again, you can see this is Tesla stock trading at $156.80. And their forward PE ratio, you could see about a year ago, was actually trading at 121.95. But now their current PE ratio is all the way down at 32.89. And what's very interesting about this kind of 30 range, we've seen about a year ago, a lot of big tech stocks were trading around this 30 PE ratio, even up to around like a 35 PE ratio. We saw it out of Apple, kind of trading around that 30 to 32 PE ratio. We saw it out of Google. Even Meta was kind of in that range as well. Again, that was a whole different environment. That's one thing to consider because interest rates were a lot lower a year ago. But basically, the market kind of topped out a year ago, and that's where a lot of those big tech valuations were kind of sitting at, and Tesla has finally now gotten down into that range. So it's going to be very interesting over the next 3 to 6 months. Is Tesla going to drop into that 20 to 25 PE ratio range? So here we actually have how basically you can use a PE ratio to determine a price. And what we are doing is we have a black box here that is actually the Goldman Sachs PE ratio. So basically Goldman Sachs right now, they're saying that around 235 is their price target. That would be a 50% increase in the stock price. And if that were to happen, basically Tesla would be around a 49.50 PE ratio. Again, one thing to remember is this is holding earnings constant and basically just adjusting the price right now. So keeping the earnings at the level that it's at right now. So with that, basically they're saying that Tesla should be valued around a 50 PE ratio or a 49.5 PE ratio. And in my opinion, a 49 to 50 PE ratio right now is kind of high, especially when you look at other big tech companies like Google and Meta that are trading well below 20 and continue to kind of trade in that range. I think you can get a lot more bang for your buck in some of those other, large tech companies right now. But what's very interesting is if you think that, Tesla is going through a change in the ownership of its stock, basically that these growth investors are, looking at Tesla and saying, hey, I don't see a whole lot of growth in front of it. I want to get out of the stock. And these value investors are starting to, kind of lick their lips and see, Tesla as a potential buy in the future. Then what you could be projecting is maybe the price is going to go down and the PE ratio is going to go down to a 25 PE ratio. So if we see the PE ratio drop to this 25 number, what will actually happen is the stock price, and again, this is holding earnings constant, but the stock price will drop all the way down to $119.19, which would be almost a 25% drop from where the stock is currently trading at. So again, this is one of those things that it's important to look at and important to understand the type of investor bases that stocks attract. Tesla still, I think, has a plenty of growth in front of it, and I think it could still command this 50 PE ratio. But if they are going through that change where, right now a lot of the growth investors are getting out of the company because they're worried about, the potential growth ahead of Tesla, then we could again start seeing Tesla drop to, around a 20 to 25 PE ratio, and that could mean a 25% drop in the stock price. Overall, guys, like I always say, make sure you do your own research. I'm just some random guy on the internet. Look at the company for yourself. Determine if it is a good buy for your portfolio, for your personal situation. And if it is, then maybe, now is a great time to buy because the stock is down a very significant amount. Maybe if you still think, there's more room to run, then hold off and, wait for it to hit a valuation where you are comfortable being in the company. So again, do your own research. That is always number one. Make sure you're learning and taking this video for what it is, a learning opportunity to kind of understand how to potentially value some of these companies. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.